You are listening to chartingwealth.com for Friday, the 27th of July, 2018. We see everything down for the day. We'll start with the S&P 500. We see it's down for the day 0.24%. We look at the weekly chart. We still have three green going into our third green up candle, meaning 3 weeks of nice up movement since we saw things bottom out and then bounce off the red signal line, the price percent oscillator, back on the week ending the 6th of July. Since then, we've seen things move up all the way through the 26th of July. And again, even though it was a bit of a down day based probably on the the response that we saw to the market of Facebook, which we'll talk about in just a minute, how the NASDAQ 100 down substantially for the day, but some impact on the overall broad market perhaps. But we see still the price percent oscillator heading up, the derivative oscillator also heading up. And again, one more day of movement to round out this 5-day candle, so 4 days into it. But again, another up week. We go from the weekly to the 2-day. What do we see? Well, it's the first day of the latest candle. And again, as far as the Heiken Ashi candlesticks and the average pace goes, we see that it is a green up candle. Now, when we look at the price percent oscillator, not heading up at the same strong market had been going up, but still headed up. Derivative oscillator actually lost a little bit of energy, and we go from the 2-day to the 4-hour. What do we see there? Well, we had that crossover going up in the morning, and then down a little bit, well, pretty much paralleling that movement in the afternoon. So again, down 0.25%. Remember, these are Heiken Ashi candlesticks. Had about 80-something thousand people listen to our training on that or watch it at YouTube. Please do look it up. Heiken, H-E-I-K-E-N, Ashi, A-S-H-I. It means average pace in Japanese. It's a different way to draw candlesticks. We find that it does help you track that average pace a lot better. Average pace is still moving up, flattened out a little bit as the day wore on. We look at the price percent oscillator. It's flat at this point. Derivative oscillator looks like it's still gained a little bit of energy. So again, keep your eye on things, particularly on that 4-hour chart. We'll see if the market recovers from the little bit of a hit that it took today, at least on the S&P 500. Remember, we had that crossover going up, which gave us a jumping in point in the morning. Let us know if indeed you jumped in on that. Now, from the weekly, we will go back to the weekly. We'll go from the S&P 500 to QQQ, which is the NASDAQ 100. That's what took the big hit for the day, down 1.52%, so about 1.5% down, paired off what had been a bigger green candle. Now we have a longer wick on top. But what we see happening, of course, is still we see the derivative oscillator for the week is flat. Price percent oscillator still managing to eke up a little bit. We still have a green open box candle showing us the average pace is still up. On the 2-day chart, what we see again, the first day of this latest 2-day candle, after a nice big green up candle ending the 25th, we see a red doji, which means just so far, and again, it's the first day of a 2-day candle, so we don't call it yet. Price movement still above the 2-day trend line, and it is well above the weekly trend line. We do see the derivative oscillators losing momentum, price percent oscillators heading down. We'll see how the market absorbs everything and how this candle ends up on Friday. We'll be giving you all of that over the weekend with our comprehensive review and forecast. What do we see on the 4-hour chart? We see strong down movement in the morning and then a bit of a recovery in the afternoon. A solid, well, again, a bit of a recovery in the afternoon as far as our average pace goes. We did have a crossover going down on the price percent oscillator. Derivative oscillator still positive. We'll see how all that shapes up over the course of the day on Friday, because we did have that bump up. Of course, you didn't have a jumping in point because of all that strong down move in the morning. But again, keep your eye on things and let's see how the market digests the bad news that it was hit with as the market moves along. Now, that's where we are as far as stocks go. Back to our weekly chart, we move on to TLT, 20-year bonds. Now again, drawing a pretty strong down candle for the week after several weeks of nice up movement, blowing through that weekly trend line. And also, we've got a change in the trend on the 2-day chart. We'll talk about that in a minute. That's already happened. But we see the price percent oscillator heading down, derivative oscillator losing lots of momentum, down 0.19% for the day. That 2-day chart, as we discussed, crossed over going down back on the 23rd. And remember, we talk about this, when you see the price percent oscillator and the derivative oscillator both flip over at the same time with a solid red down candle, that typically portends several candles of down movement, which is what we're already seeing. So we've had price movement, of course, blow through as it crossed over going down the weekly trend line. Price movement still below that 2-day down trend line. Since the weekly and the 2-day are moving in opposite directions, we don't have a trade. What we do see, though, is makes us wonder. We see things really sliding sideways as we look at that 4-hour chart. The market really bottomed out all the way back on Monday, the 23rd of July, and has really just slid sideways the entire week and hasn't moved below that mark. So we'll keep our eye on things. We see derivative oscillator actually losing downward momentum. So we'll continue to watch. Weekly is still in a confirmed up move, so we'll see if indeed there's enough power to move the weekly over going down, or if it's going to be that 2-day chart that flips back over going up on bonds. That's where we are as we end Thursday, go into Friday as far as bonds go. Lastly, we go to gold. What's going on with gold? Well, gold has been moving down for quite a while since it rotated over and started earnestly going down the week ending the 27th of April, but for 3 up weeks. Gold down for the day 0.78%, our second biggest down for the day. And we see the derivative oscillator gaining downward momentum, price percent oscillator heading down. And we see, of course, price movement well below that weekly trend line on the 2-day chart. Now, as we look at that, it tells us a little more, doesn't it? We had strong down movement on the 2-day candle ending on Thursday last week, the 19th, and then so far over the course of the week, sliding sideways. This latest candle is the first down candle we've seen for the week on the 2-day chart, and it's not drawn yet. Derivative oscillator losing downward momentum. Price percent oscillator pretty much flat. So we again have the 2-day candle heading down. We see that our 2-day trend is heading down. The weekly trend is heading down. What does the 4-hour chart tell us? Well, it's crossed over going up. Now again, remember, this is like a backup. If it crosses back over going down, and it was down for the day both in the morning and the afternoon, derivative oscillator losing momentum, the price percent oscillator kicks over going down, it might give you another inverse play in gold. Remember the last one we had, it was quite nice. We had it cross over going down back on the 13th, jumping in point somewhere around 117.88, something like that. We'll just say around 117.50. And of course, it bottomed all the way out down at 115.12. So again, some nice movement there. And this is again an inverse play where you'd be buying a put or you'd be looking at an inverse gold fund, although they aren't typically all that liquid. But that's a nice movement down in just a few days. Then things, that move stopped. Things sort of slid sideways up a little bit. Perhaps it'll rotate back over, giving us another inverse or down play. If you've not listened to our training on inverse funds, inverse ETFs, how to make money when markets crash, please do that. That's also available at our website and at our YouTube channel under trainings. Folks, that's where we are as we end the day. If you've not purchased our book, please do so. You'll see links everywhere we post our material under the show notes for information about buying our book, Charting Your Way to Wealth. It explains everything in depth that we do here. Lots of good reviews. We're just about sold out of our 4th printing, and we have already reordered for the 5th printing of the book. So please place your orders. You'll see the links to do so at our YouTube channel, at our website under our daily market reviews, and if you're receiving our email, if you're not a subscriber, you need to be. You can subscribe at chartingwealth.com. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.